Welcome back to financialfreedomandonesty.com. My name is Mark here with another video. Today we're going to take a look at the age-old adage, sell in May, go away. Now, is this really true? Should we really pause or take a break on our investing during the summer months? Let's dive right in. So before I give my opinions, I figured we should do some investigation to see if there is any truth behind the statement, sell in May and go away. And the first piece of information we found was a study by Yale's Hirsch, written in the Stock Traders Almanac. The Dow Jones Industrial Average has returned 7% from November to April and just 2% from the May to October period. They went back to as far as 1950 for this statistic, and the S&P 500 shows a similar trend where average returns from May to October are significantly lower than November through April. Interestingly enough, this is not only a Canada, US / North American phenomenon, but is also observed in Europe, Asia, and emerging markets. Apparently, the saying is often looked at from the other side and is called the Halloween effect, which I am guessing is more of a lead up to the Santa Claus rally, but what do I know? I'm just one person with an opinion. Other speculative reasons behind why this occurs includes lower trading volumes in the summer due to institutional investors taking vacations, fewer earning announcements, and market moving news during Q3, which I would also guess is just before the hype of Q4 and the Christmas season. Now, some of these have complementary reasons, like reallocation or risk off if there's lower trading volume, right? Like if you have enough money that you're buying in large quantities, if there's low volume, your buying could affect the price that you're paying or selling for, right? So cause and effect. Looking at a little bit more research. So there's a study in 2002 by Sven Bowman and Ben Jacobson entitled The Halloween Indicator, Sell in May, Go Away. Another puzzle, and they examined 37 stock markets. They found that 36 out of the 37 markets performed significantly better from November to April than May to October. However, they couldn't find an explanation due to risk, volatility, or macroeconomic variables, and concluded it's just a persistent seasonal anomaly. Some more recent information. There's a recent article on Nasdaq.com, and they noted actually that April this year, unlike previous years, was somewhat unfavorable, and as per a video last week, May was quite favorable. With all of the indices, Dow, S&P 500, and Nasdaq were up quite a lot over the month of May. So, brings us back to the question, should you really take a summer break? I mean, historically, yes. Markets have underperformed in the summer months. However, if they still gained, right? Like even if you gained 1 to 2% over the summer months, if we were just to hold off buying until September or October, we would be able to afford 1 to 2% less, right? Now, I guess if you're an index investor, then that especially holds true. Maybe if you are more of a stock picker, it would make sense to hold off. I'm not sure. But personally, I do not take a break. I prefer to continue to dollar cost average throughout the entire year. I do buy in larger quantities 4 times a year, which is typically the biggest one being March, April, with around tax return times, and then the end and start of the next quarter. So June, September, and December. I guess arguably maybe I should hold off in December because of Santa Claus rallies. But again, I don't like holding off. I prefer to just always be buying. And while the trend is statistically significant, I still believe that timing the market is always difficult. And one more thing to note, that the summer has been pretty strong the last few years, right? Outside of 2022. So I prefer do your your constant buying or dollar cost averaging. If the market is weak, buy a little bit more if you have a little bit more money. And just to wrap up, one more piece I wanted to add is if you hold off investing during the summer, in my mind, you may be more inclined to spend that money, right? If you have a heavy bank account balance, you might say, hey, let's go do X, Y, Z instead of, if you had a little bit less, maybe you would only do X or X and Y, right? Like you might be inclined to spend more if you have more, if that makes sense. So, in other words, just want to leave you off with one saying: don't let summer spending wreck your investment contributions. Thanks for stopping by, and cheers.